The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
As we start the show off, we're up 19 points on the S&P cash. Let me update that just to make double sure. Yeah, 19 points on the S&P cash. Dow's up, not 30. I want to say the Dow 30. Up 180. NASDAQ's up 68. Russell 2000 up 20. 1703.14. Crude's up about 75 cents. And that's kind of about it. Kind of a quiet day. For after the pop this morning, you had a little bit of action that first hour. We've kind of gotten over that 3,300 level, and it is kind of hovering. Of course, we had one of the biggest spikes in VIX calls yesterday, so I wasn't very surprised to see that they got run off or run out today. Of course, bullish VIX means bearish S&P, so you've got to think about that. But generally, whenever they pile on in to the point where they were 86% calls yesterday, it tells you a little something, and that's kind of euphoric on the, I shouldn't say it that way, but the bears are euphoric in that they think the top is in. They're almost always, if they're right at all, about 3 days early. Of course, we've got Monday off, right? Isn't that right? I think we got Monday off. So got a little bit going on there. Gold hanging out here at 1551.45. See if there's anything else that we really want to get into. But I don't think there's that much going on. As we said, I already took care of crude, gold. That's about it. I don't see much else that makes any kind of sense to talk about. We had a little bounce today after the sell-off yesterday. Of course, we've got the, UMS, EIEIO, ABC, Canadian, Mexican, USA agreement signed today too, or actually passed. It'll be signed here in a day or two. So pretty much all the trade issues are over. As they say, the market climbs a wall of worry, but no worry today. No real worry about any political ramifications. In fact, I think the market gets happier and happier the more that the politicians shoot at each other and can't go over and molest the individual citizens. So not a bad day. Like I said, a little pop up here, but there's a lot of little warning signs, but no signs to say it's time to short too much. We may get a little bit of a pullback yesterday or tomorrow. And the reason generally is if you bounce fairly strongly on Thursday, then generally there's not much action and a slight pullback on Friday. If you don't do much or even go down on Thursday, generally the bounce is on Friday into expiration. Of course, the monthly expiration also allows us to have a lot of time between now and fund buying. You've got literally all next week, of which we are closed on Monday, right? I think so. So you got all of next week. You've got basically 4 out of the 5 days of the week after that before you see any hide nor hair of fund buying. So if you're going to see the market kind of move down, it's going to be in that kind of 21st to 29th area. when we'll have the back and fill. When fund buying comes back in, I can't see it any different than what we've seen before, but we could have some sharp corrections. It's been a while. Most of the things that the market was worried about are gone. The massive shorting generally is a couple of days before the market actually turns. Not always, but it can be. So you want to keep your spidey sense up to 11. I got 2 movie references in one mixed metaphor. Wow. I think I'm hitting it in strides today, folks. Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can always put a message in the den. But today, I think we're just looking at maybe trying to hold this level for a little while, maybe a little bit of pullback tomorrow under 3,300. I was thinking maybe 3,320 today, but volume kind of light so far. We're at just about 4 billion shares. So there's nothing out here really pushing higher. I suspect that one of the things that we will be looking at certainly is whether or not people quit shorting today. Just from the kind of the action in the market, the volumes, I suspect when I go through the day to night, it will be fairly good. Fairly light. And that's generally when you want to start thinking about the market turning. Not when everybody else is shorting, but when they all quit shorting. We've got a lot of stocks, people asking me about anything going on, and that's about it. Now, we've got, I think, did we get it in here? Yep, we've got Tim Ord coming on at the break, so I've got to get that stuff ready. We'll go through what he looks at this year, and that'll be kind of it. We better do our history right now before he comes on.
And it's all just a little bit of history repeating.
On this day in 1919, the 18th Amendment of the U.S. Constitution prohibiting manufacture, sale, or transportation of intoxicating liquors for beverage purposes is ratified by the requisite number of states. The movement for the prohibition of alcohol began in early 19th century when Americans concerned about the adverse effects of drinking became formed temperance societies. By the late 19th century, these groups had become a powerful political force. Basically, the ravages of the Civil War started a male, what would you call it? Pandemic? Epidemic? I'm going to say epidemic. I think it's more than a pandemic of alcoholics seeing horrors of war that no human should have to see. And of course, at this time, they'd already pushed it through. We were going to get a whole new bunch of people that had lived through incredible horrors in the First World War coming back. And as they said, how are you going to keep the guys on the farm once they've been to Gay Perry? We'll be back with Tim Ord in just a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we want to welcome back Tim Ord of the ord-oracle.com. He's been, more than 30 years writing a newsletter on the top 4 long-term market timers from Timer Digest. And, of course, caught the biggest amount of wood on the bat for the gold market back in 2000 when I bumped into him. How you doing today, Tim? Oh, there you are.
Are you there?
Yep.
You hear me?
Yep. Hear you fine. Hello.
Hello.
I got
I'm
you.
here.
Do you have me?
Hello. I can hear you.
Okay, we're good. How you doing today?
Good.
Okay. We got all your charts out here. We haven't talked to you for about a month now. I think it was a week before Christmas vacation that we talked. We were looking at a few things. Didn't get much of a pullback, and the market just keeps going higher. I see you've got a lot of lines on this S&P and the TLT, which is your chart 1. So what are we looking at here?
Yeah, we'll take a look at that. It's a long-term chart. Goes back to about 2010, and normally, it's the SP 500 against the 20-year Treasuries is what that is a ratio of the S&P 500 to a bond ratio, I guess. And when S&Ps outperform the bonds, usually that's a good indication. When it's underperforming, it's usually market's either in a consolidation or a decline. And back in around December of 2019, we broke above. We were in kind of a consolidation phase for about a year, kind of went sideways. And we finally broke above the downtrending line. And normally in the past, when that's happened, the market went into an impulse wave to the upside. This chart's updated today, but I started noticing that chart was breaking out end of the year, first part or end of December, first part of January. And that continued to rally. So I'm thinking an impulse wave is going on here. Previous impulse waves like this, where it's a long-term chart, they lasted at least a year and sometimes 2 years. So
I think we talked about this last time, but I have a feeling a lot of people don't understand what an impulse wave is. So maybe you want to explain that a little bit.
Well, actually, there's two patterns in the market, really. There's an impulse wave and a corrective wave. Corrective wave is basically where the market kind of chops around in a trading range where it bounces against its previous highs, previous lows, and really doesn't go anywhere. An impulse wave can either go up or down, but usually it goes to higher highs and higher lows, or lower lows and lower highs in case of a downtrend. So what I'm saying here is we broke out of a corrective wave on the SPX in the December time frame, and now we're starting a pattern that will probably more or less make higher highs and higher lows. So it's a pattern that continually makes gains, or in this case, gains. And so we expect this market to make higher highs like it's been doing over the last month or so here. So we think we're in an impulse wave, and this impulse wave could last a year, maybe two. So there'll be some corrections along the way, obviously. That can go straight up. But the corrections, if you look at this chart and go back, the corrections are about, at best, 5%. Usually you don't get 10% corrections when this SPX TLT ratio breaks out to the upside. So this year, in general, will probably be better than last year. And we'll probably go right into December with really no major declines. That's what this pattern says here, this SPX TLT says. So it looks favorable, even though if you look at the news, with all the impeachment stuff going on, you would think the market would be more unsure, but it appears the market's fairly certain, at least it feels confident that the market is worth investing. So anyhow, this pattern's bullish.
Do you have
go on to it? Go ahead.
I was just going to say, what do you? I don't know. I haven't had a chance to look at the other charts out there, but we had, I guess, yesterday, 85% or 85% of the options in the VIX yesterday were calls, which is horrifically, you would think bearish on the market. But generally, when they go that far and think that everything, the wheels are going to fall off, we always get yet another 20, 30 point bounce in the S&P. Is that kind of what you see out there? I know you spend a lot of time on the short side, or at least on the sentiment indicators about how many people are short.
Yeah. Did you actually? We actually got a chart on. Do you have a chart number 4? I didn't have.
Yeah.
That's actually a sentiment chart, and if you do, we'll take a look at that one real quick. Anyhow, the top window is the SPYs, and the window below that is a 21-day average of the equity put-call ratio readings going back to, it looks like about 2010. So it goes back close to 9 years, 10 years. And anytime they've got below, eyeballing here, it looks like about 0.52. I got all those times circled on the chart above it. And we did have a correction back in 2010. The market actually went down. And 2011 looks like about the January period. It didn't do anything, went pretty much straight up. And then 2014 looks like about January again. It did have a correction there. And what it did, so we're basically back there again now. Will the market correct? With the sentiment leaning this far, I guess, everybody's on the bullish side of the camp, at least on the equity side. Do you expect a big correction coming? The statistics say no. You can have small corrections, but that goes into the pattern with the SPX TLT. You can have corrections, but you don't have major corrections. Is there a chance a 5% pullback can come around the corner? Yeah, but probably not a 10%. So, it could be a short-term slap in the face where everybody gets all panicky and the market turns around and goes right back up again. That's what I'm thinking is going to happen. I don't think any major highs of any consequence is coming here, according to the XP or the equity put call ratio readings and the SPX TLT. So, far as the VIX, if I know you're going to look at the VIX, I have some other indicators on the VIX. But since I didn't send them, we won't talk about them. But
okay. Maybe we'll do that next time. We're going to be going to the break. Come back with Tim Ord of the ord-oracle.com. Of course, he's got the Ord Oracle, which is his newsletter that he's published for 30 years and in the top 4 long-term market timers and Timers Digest. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trade along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Tim Ord of the Ord Oracle. We're looking at chart 4 right now. Do you want to go back to 2 or continue on here?
We actually go back to 2 if you can. Really, you were talking about everybody's leaning on the call side for the VIX, whatever, expecting VIX to go up.
Yeah.
What I found out through the years is actually momentum rules everything. If the market's going up, I don't care what Summit says or what everything says. Summit can warn that a top is nearing, but as long as the market keeps going up, you don't try to fight it. So I keep telling everybody, it doesn't matter. If momentum's up, market's going to go up. And this chart here is kind of a momentum chart. What it is a pretty simple chart, but it's basically when the RSI is above 78 on a daily basis, which we hit back in, looks like about January 1st or whatever. That's when you hit 78 on an RSI on a closing basis, it's never the last high. The market always goes up and makes a higher high. And this chart goes back to 2003. Now, labeled all of them, which are those, they're pretty rare when it happens. An RSI gets above. This is on the NYSE. There's another one we'll go to another chart that's on the SPX, but this one's on the NYSE. And so the red lines show every time in the past when the RSI did get above 78. And there's not a whole lot of times, but none of them were at major highs. And so again, we just hit the RSI 78 here like a week or so ago. And when it does get above 85, it's usually a short-term exhaust move to the upside. And that happened back at the 2018 high back in January, and also happened back in 2000. Looks like about 4. It wasn't exactly at the high, but did warn that a pretty massive correction was coming. So RSI above 78 is bullish. RSI above 85, which is exhaustion. I didn't put that exhaustion 85 there, or that number 85, but you get above 85 and normally it's exhaustion. Will the current rally hit up to 85 on the RSI? Don't know. But it does appear that we're not near any, we'll put it this way, we do get to 85 here on RSI. It would imply an exhaustion. You'd get probably some sort of a massive decline. If you don't get 85, we think in general the market's going to kind of just chug higher, not withholding a 5% correction. That could happen any time, but not a 10% correction. So we're kind of in one of those rare times where the market is probably going to keep, in general, marching up here. So this is a market that you don't really want to fight, and it's just you got money to invest. I guess this year would be a good year because we're probably going to end up, I bet, most likely in double digits again. So
I did want to put a fine point. Yeah, you had a theory about 3-day weekends across the summer. We've got Monday off. Is any of that go into a turn in either character or direction, at least for the short term, for us being closed on Monday?
Yeah, it could. I thought we had something going in on Christmas, and we did get a little minor blurb there, but it turned around and went back up. And we may have that same thing going into President's Day, I guess it is. And yeah, we could stall, but instead of trying to anticipate the high, I think if you do get a pullback and you get panics in the ticks and trend, in other words, a trend above preferably 1.4 and a downtick reading, maybe minus 300 or something, that would show panic. And panic's what happens at lows would be probably a good buy because, can we get a 2-3% pullback maybe? But yeah, you're right. A lot of times, if you're going down into a holiday, a lot of times the volume drops off because traders take off early for the holiday. And same with going up the top. If the market's going up and volume starts to drop out, a lot of times that's a very short-term sign. So, yeah.
The only reason I bring this up is I have data for how many people shorted or how many shares were shorted each day on a daily basis instead of the bi-monthly. And I just see every day that we get Apple being shorted 25%, and Boeing being shorted 20%, and Tesla 30%. Tesla was kind of the first one to roll over today of these ones that had their big last runs. And I guess maybe more than any, I don't see a signal, but I do kind of see maybe some little bit of warning signs maybe, and that's kind of what I was thinking about. But anyway, you want to go to chart 3?
Yeah, we can go with chart 3.
Okay.
This is kind of instead of the NYSE, this is the daily SPX. And it's actually a pretty much momentum chart. And what I wanted to point out here is markets top when the RSI is usually below 70. And those pink areas, those wide pink areas, are times where the market peaks. So when you're going into a top, momentum's usually weak. That's my point of this. But when the RSI hits up around 78 or better, the momentum's usually strong, and the market will continue higher. So it doesn't work perfect, but it works the majority of the time. So when the RSI on the SPX hits around 80, or NYSE is 78, normally that's not the last high. Another higher high is coming. And again, momentum trumps everything. Market's going up. So if we do get a correction, since we just hit 80 on the RSI here just a few days ago, if the market does have a minor correction, which it can, it would probably be a good time to buy that correction. So with momentum so strong here, there's not a good chance of a big pullback. So, I'm not a big bull here. Well, actually, I am for this year with all the momentum charts, getting to really strong readings, suggesting this momentum may continue a lot longer than what people may think. So,
but you're thinking 5% pullback. That's where you'd be a buyer, maybe even a little less.
Yeah, I'm thinking anything 5% or less. The chance of getting a 10% correction in the near future is pretty slim. I'll put it that way.
Okay.
Can you get a 5%? Yeah, you get a pretty slap in the face pretty quick, and they'll turn around and go right back up again. So it's, we had back in December 1st, wasn't that like a 2.5-3% correction? I don't have the exact statistics of it, but it happened basically in 2 days. Went down real hard, hit some panic, and it took some trend, turned right around back up, and since 1st of December, it really hasn't done anything but go up.
We want to thank Tim Ward for coming on today. We're going to be going to break, Tim. You can catch Tim at ord-oracle.com. If you want a copy of any of the charts that he talked about today, if you email me at path@tfnn.com, I'll be glad to send them. Thanks for calling in today, Tim. We'll talk to you in a couple weeks.
All right, sounds good.
You bet.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Well, it tells you something that I can't even. I've been so busy since coming back at the beginning of the year. I just haven't even thought much about a vacation through this week. I started looking at it Tuesday or Wednesday. But yeah, Martin Luther King on Monday. So we're off on that. And the next vacation day comes in February 17th. But going into a long weekend, you can have a lot of unintended consequences. As I said today, not surprised to see the market pop today and also pull back. Even if it's just 8 points tomorrow, they'll be able to crush a bunch of options on the S&P if they can get it back below about 3,300. So maybe not much of a move out there. Maybe it's quick in the morning or something. But then we, of course, everybody has to make a decision about what they're going to do in the long weekend to come back on Tuesday. But I'd been thinking of all the things I needed to do, and I'm just I just felt a little bit of a load off my shoulders when I remembered that we have that holiday on Monday. So, make sure and do something nice. Go outside, swim in the pool. I have to rub it in this week because, man, it's been one of the most beautiful Januaries of all time down here in Florida. And I see, we get a lot of people to come down here for Christmas and stay a while. Especially Canadians. And I'm on the flight path for those Canadian airplanes because they just load them up with charters of people coming down here. But, man, can you imagine it's negative 20 with this guy that I talked to, or negative 30 in Yellowknife in Canada. And he's down here in 80-degree weather today. And, that's the kind of thing you do. That's why you want to live in Florida. Let's go ahead and take a look at a few things. We'll be talking to Tom O'Brien tomorrow in the 3:30 segment for the Tech Insider. Microsoft just continues to do extremely well. Light volume gap up here. I'm not predicting it. I'm just saying watch for it. If we do kind of get this gap down, then we could have probably something setting up for next week in a low volume pullback. I think you could get back to 160 on Microsoft. Now, there's absolutely no signal. The signal would be a gap down to yesterday's close, which would be around 163, 164, and 160. Let's call it 163. In that area where you have a nice abandoned baby. And surprisingly enough, they've been going on the opposite side of options today for most of the morning, which also tells me maybe there's a little bit of maybe just that 1 or 2 or 3 or 4 day pullback next week. And as I said, if it's going to happen, it's probably going to happen there because you give it much more time, you get a week or two, then you're back into fund buying and the market's just going to go higher again or once again unless we have some overwhelming selling into this market. But that's kind of it at the moment. Anyway, I want to thank Tim Ward for coming on. I learned a lot of my early trading from him. He's got very, very long time horizon time horizons for his trades, and I'm talking about 2-3 years. So we're not talking about, I guess, trading in the traditional sense that we have around here in TFNN. But it is kind of interesting to see just how tough it was a year for those folks that were longer market timers. In fact, I think the guy that won this year captured a whole 125 points in the S&P for whatever it was, a 600-point move. So it is tough to make those longer-term calls. You get a lot of stuff that looks a little weird. The Fed comes back in with their fire hose of cash and puts out any bad ideas that people might have of the market going lower. But we've been on quite a run. The little pops out here today make me think that, yeah, we could close, just gap down a little bit tomorrow. Again, not a prediction, just something you want to look at. But we haven't really had kind of one of those little gaps for a little while. Now, maybe it just goes sideways. But I suspect that with all the bearishness in the far downside, that a lot of people are worried about not really so much tomorrow, although they may sell into it. We've also got a lot of news, and that news could be sell the news kind of news. Not bad news, but a lot of times all that news hitting is enough to make a temporary high. I think that I'm kind of in agreement with Tim Ward that this year is going to be fairly good. But at that same time, you get a run like this, there's going to be profit taking by some people. They're just going to not be able to sleep at night knowing that they have so much money and looking for something like Microsoft to open up $10 lower one day and wish that they'd sold. You get a little bit of that kind of creeping in, and you just can't help it. Anyway, not looking for the end of the world, but 2-3%. Maybe as much as 5%, probably going to come along here somewhere. And of course, the news generally, when you get markets like this, everybody thinks they know where the news is coming from, and it almost always comes out of the blue from somewhere else. But we've seen a market that thought about war, political intrigue going on in the capital. Nothing seems to really bother this market. And there's an old saying is it doesn't matter till it matters. But generally, when it matters, is the market doesn't like telegraph it a lot. You just get that kind of little air pocket out there. Maybe you get a little bit of a hint of it tomorrow. Maybe we get a little bit of change in character next week, and maybe even through the next time. But again, we have to look for that fire hose of cash, not from the Fed, but from those fund buyers. Now, we've got a little bit of earnings going on next week. We've got a little bit going on tomorrow. In fact, I wanted to talk about that. Maybe we, can I get to it now? I think so. Here we are. After the bell tonight, we've got CSX Corporation. That's right at the bell close. So we're going to get a little taste, or a little bit more taste, of what's going on in the train business. That is followed up tomorrow morning by Kansas City Southern. And of course, a little bit in the oil business, Schlumberger. We've got Fastenal, they're the nut and bolt sellers, which tells you a little bit about industrial production. We've got JB Hunt, transportation systems that tells you how many things are being transported by truck. And State Street, Citizens Financial, Regional Financial Corporation, a lot of regional banks. So we'll get a little bit of flavor and color tomorrow on that. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Got to cut just a little bit going on here. But, yeah, you kind of bounce on Thursday. Generally, that means you're probably pulling back. We'll see how the market closes, but not a bad setup. We've been kind of stuck at 33.08. My guess is that we open at 3,300 tomorrow on the S&P cash, if not a little bit lower. And maybe we move up later in the day, maybe not. But right now, just kind of a market that's going to be quiet. A lot of people are probably not going to want to go into a 3-day weekend and let their winners run. So you get a little bit of selling pressure going into that 3-day weekend also. I'm not talking about any kind of monster move, but you can get a little bit of action at the very beginning of the day. One of the things that also makes me think that we could have some action is the very light volume that we're having today, which signals that generally the big move in the markets could come tomorrow. We only have about 4.5 billion shares today for expiration. And could that be enough to get everything going? It could. But generally, if I was looking at maybe a day where we could come in with maybe 8 or 9 billion shares, then I'd think all the action was over and tomorrow was going to be nothing. But kind of just a regular day into expiration like this with a nice 20-point bounce in the S&P cash makes me think that we've got more action tomorrow. Now, maybe it goes higher, maybe it goes lower, but there's some option plays out there that are dime options, and as long as you don't go too deep, they may be 50-50 bets, but they may return 500% of what you're looking at. Anyway, so when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time. Get ready to have a 3-day weekend.